Hey, what's going on, everybody? If this is your first time tuning in, I like to say welcome. If it's not your first time tuning in, I still want to say welcome and thank you for always pulling up to Tim's Tidbit. This is another episode of Mama, I Want to Trade. Hey, yeah, thank you again for pulling up to Tim's Tidbit and Mama, I Want to Trade. If you don't know who I am, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every single day and talk about the price action on, but that's not what you're here for. You're here to discuss the ICT concepts, and we are in the middle of the lingo section. And the next lingo or word or PD array, if you will, that we're going to discuss is, drum roll please, the order block. We're going to be discussing the order block. Now, the order block, this is the very first PD array that I call the breadcrumbs, if you will. It's a reference point. It's not a void. It's not an imbalance. Should I say it's not an imbalance? It's a reference point. Just like the mitigation block, just like the breaker, you know, the order block is a reference point, an institutional reference point, right? So, like I said, this is the very first PDA or PD array, however you want to say it, that I call the breadcrumbs. I called it the market was leaving little breadcrumbs when it's going through the market maker sell and market maker buy models. Don't worry about all of that right now. But when we was going through, I said, okay, it's leaving little breadcrumbs with these order blocks on each side. So that's why I say the breadcrumbs of price action. Now, let's get into it and see what ICT actually says about the order block. Because again, we're just breaking it down in simple terms, the way that little Timmy Rogers understand what ICT said. That's what we're doing. Now, moving on. Here's ICT's, well, on this one here, he actually put in a lot of information, but we're going to focus on, we may focus on a couple, but most of all the definition, the order block. And again, everything is just the reverse for the opposite. This is an example of the bullish order block. Everything is just the reverse. And don't worry, like I say, when we get to the price section, we will show examples of both. But everything's the same, just turn it upside down, right? So here we go. Bullish order block. Definition. The lowest candle or price bar. I ain't gonna worry about saying price bar because we worry about candles, right? The lowest candle with a down close that has the most range between open to close and is near a support level, meaning the beefiest candle, right? The beefiest down close candle around a support level, right? Price comes down to or through a support level, right? And the last down close candle before a violent move up like this and we get the violation, that's the order block right there, right? Validation, what makes it the order block? When the high of the lowest down close candle is traded through by a later formed candle. Again, you get the, I like to see the violent price action, the heavy distribution. That's what makes me say, that's an order block. If it just trade up a little bit and start dilly-dallying, technically it's an order block, but I like to see the big institutional candles. I like to see it move, right? So, entry techniques, he got some entry techniques and he'll talk about when the price runs away from the order block, mean the heavy distribution like I'm saying, and then the price returns back to the order block like this. This is when you looking to get in once it starts to return back, right? And he got some risk parameters and all of that. You can, you know, we'll get into all of that in the strategy portion of it. So that's ICT's definition of an order block. Price comes down to or through a support area for the bullish order blocks, and then the beefiest candle in that area, down close candle, the last beat, like if it's a tiny down close candle next to a big one, you want to look at the beefier candle, the bigger candle. Now let's see how little Timmy Rogers interprets this, right? So when price trades to a support or resistance level, right, come down. We're coming down to A. We're coming down to or through support. This is the, it can be a fair value gap. It can be a swing low. It can be a breaker. It can be any type of support that you're coming down to. It can be a volume imbalance. Any kind of support that you're coming down to, you can come down to or through the support. It don't have to go through. It can come close to it. It can go through it. It don't matter. The next candle can even trade through it. But once we get that violent reaction off of it, right, then it's met with heavy contrarian distribution, B, right? This is the heavy contrarian distribution, meaning we was doing sell side coming down, and then we got heavy buy side up, and we broke the opening of this down close candle and thrust it up, right? Then the high of the down close candle or the low of the up close candle is violated right here with the heavy distribution. The high of the down close candle was violated, and if it was a bearish, it'll be the low. It'll be the low of an up close candle being violated, right? And then again, same thing. The entry technique is once price trades back down to the order block. This is the order block here. Now you can get like a early entry when it first breaks through. If price like trades back down and touches the order block, you can get an early entry here, but the main confirmation entry is when you're coming back after price blast all the way off as far as it's gonna go. It can be here, it can be there, it can be wherever. Then it starts to trade back down to the order block. That's when you're looking for, that's your confirmation entry, right? Now let's go find it in price action, right? So here we are in price action. As you see, price came up to this fair value gap acting as resistance level A, right? So we came up to a fair value gap. That's the bottom of the gap. So this is the support of the fair value gap. This is the resistance of the fair value gap, or the bottom or the top. So we came up into a PDA, right? Coming up into resistance, right? It's a premium PDA, right? We're coming into a premium PDA. So that's resistance. Fair value gap acting as resistance, right? Heavy sell side distribution, right? We got heavy distribution. See this big beefy red candle, heavy sell side distribution coming through right there. That's candle B, right? Low of up close candle is violated, right? So right here, this heavy distribution violates the up close candle. So in this one, we're looking at a bearish order block. That's what that minus OB mean. That means bearish order block. That's how I mark it. If it's a plus, it'll be plus OB. That'll be a bullish order block, right? So negative OB, that's a daily bearish order block, right? Price comes down, does its thing, returns, start going back to it, boom. Look like it came pretty much to the mean threshold of 50% of this bearish order block, and then sold off, right? Pang, took off, going down to the downside, right? So that's a order block. So that's your example of a bearish order block right there. If we go back, this is a bullish order block, got a down close candle trading back down, a down close candle at support, trading back down to it. So you got down close at support, heavy distribution on the buy side, right? And then trading back down to it. And then you got an up close candle at support, heavy distribution to the sell side, trade back up to it. That's a bearish order block right there. So there's both your examples. And hopefully I was able to clarify what the order block was. If you need more clarifications on this, please feel free to go to ICT's YouTube channel, the Inner Circle Trader, and look at his core content videos, and look for the video covering order blocks. Very informative. Or you can just watch this back and see how little Timmy Rogers think about it. And again, don't forget, these are just small introductions, brief introductions to what the lingo means. We're going to get more in depth with the price action videos, and then we're going to go further in depth with the strategy videos. So till next time, trade safe, and I'm gone.